The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off, and we got another volatile day shaping up with the NASDAQ 100 off by 1.56%. That's 320 points in the red at 20,345. And you see where we've come down. Jumping around, I was just putting this, you put this market right now, whether it's on a 10-day, okay? But even pull it back on a 60-minute chart, okay? On an hourly basis, there's your 60-minute chart. We've had quite the acceleration. Right? On Tuesday's acceleration in the market, on Wednesday's acceleration, but you take a broader look at this market, man. We are approaching, again, dicey territory in these markets, pushing lows, and we've had a series of lower lows, lower highs, and you take a look at the volume, okay? Look at the way the volume's accelerating into the lows. A little bit of a bounce yesterday. Actually, the lowest volume day we've had in the last 5. Not what you want to see on that huge bump. And then what happens today? We're going to wipe it all out with a large red bar. Now, the day is young. We got 23 minutes until trading begins. But check out the S&Ps, right? You look at this thing on a daily basis. There's volatility. There's not an acceleration to the upside. Okay, doesn't mean you're not going to get huge moves in both directions. I've been saying it. You got a two-way market. I would try and let your profits run. Keep your stops in place. Cut your losses when you can. And make another trade. Because there's opportunities for 10-time multiples, 15-time multiples, 20-time multiples in this market when you're moving, 2, 3, 4% over the series of days. But today we kick things off in negative territory. How about the Russell? Off by 1.25%. Trading off 26 points right now at 2,079. The Dow, the strongest of the indices, as in only down about 0.8% or 360 points in the red, 42,714. Crude, down to $65 yesterday afternoon, and we're trading at 66.74 right now. Now, boy, let's get to yields in the dollar, because the dollar move is really something else right now. And we got the 10-year right now. A little bit of volatility. We have the ECB. You have Lagarde speaking right now. And we got the 10-year at 4.28%. Okay, the ECB cuts their rate 25 basis points this morning. They go to 2.5%. And seems like they're ready to pause. They don't need to cut any more than that. Nonetheless, we jump over to the dollar. And look at this thing on a daily. Check out this dollar move. You talk about a move, man. Pay attention to what's happening to the dollar. I don't see this one slowing down. You put it on a weekly. Look at that weekly bar. We're going back to the bar. I haven't seen anything like this since November of 2022. Look at that weekly bar. Think about the volatility we've had over the last 2 years. And look at that weekly bar, man. I know I'm harping on it, but boy, that is something else. Let's see on a monthly even. Yeah, we're 6 days into the month. There's your monthly bar. Seems like 100 is where the dollar's been heading. And you put this thing over on a daily. We were getting some bounces here. All the pressure has been on the downside since almost election day, which is remarkable when you put it in that context, right? Dollar drives up to 109. There's your election day gap. The 17th, the 21st. Election day was Monday, MLK. You came into that at 109. By the time you made it to the Tuesday open, we were already at 108, and it hasn't stopped, and we're at 104 right now. So keep your eye on that dollar, because I don't think it's over just yet, and I think 100 is where we're heading, which is not outlandish, folks. That's where we were in September. That's where we were in October. Talk about a move. We jump over to the VIX. And yeah, we're coming up to an area in the VIX on more than one occasion, right? This is where volatility usually has sputtered out. So it'll be interesting to see if things go actually further. because we've now reached a level where you're talking about we've seen spikes in September of last year, October of last year, November of last year. The spike in December got us all the way up to 28 for a day or two, but you can see the rollover at a price point of about 23, 24. That's where the VIX currently sits. And again, that's today's day, so we are up another $1.66 on the VIX, trading at 23.59 right now. Now the move in the dollar, okay, not really translating to gold. Right? Interesting. We have a rip-roaring decline going on in the dollar, and gold priced in dollars. It hasn't moved, but gold holding up relatively well, and we've seen this happen on the flip side. As in, when you had gold strengthen remarkably, you had gold holding up well. Now, as the dollar is remarkably weakening, gold's still holding up relatively well. I mean, we're within $50 or $60 of all-time highs right now. I think on the longer-term basis, gold poised to make a run for that 3,000, and even longer term, 33.50. All right, so let's jump around to some of the headlines where we're going to kick things off. NASDAQ futures. Yeah, now, even jumping ahead of that, okay. So this news out at about 8:20, and there it is. The ECB cuts again and signals easing phase is nearing its end. So they bring their target rate down to 2.5%. Right? Remember, we're close to 4.5%, which is remarkable. Reduced by a quarter point to 2.5%. The interest rate cuts are making new borrowing less expensive for firms and households. Yeah, I would say so, man. But yeah, seems like they're going to contemplate a timeout from rate cuts next month. That their 2% inflation goes within reach, and at 2.5%, that's where they're going to sit for right now. All right, we're going to talk a little Walmart, because this one is an interesting one. I'm going to see how it plays out. So the news reports out there, and they're going all over the place this morning. And China, listen, you know what I found myself thinking this morning when I saw this? We go to Walmart. We're talking Walmart. We're talking Walmart eggs. 2 dozen eggs at Sam's, folks, $9.34. And I'm fairly certain they are coming from China, but I'm going to find out for sure. No, I'm pretty sure they are. And it would make sense. China's producing a lot of eggs. I don't know how many of those Chinese eggs are ending up in America, though. You know, there's plenty of places that China can probably sell their eggs without shipping them all the way to America, when you think about it in that context. A little dent conversation going on. Walmart shares been under pressure with the market. This morning, we're dipping lower to 94.66. So the story out there that Walmart, they're trying to shift the burden to their suppliers. Okay? There's nothing wrong with asking. Right? That's what I always say. Anybody. You ask in business, you ask in life, there's never a problem. Now, sometimes questions can be insulting to certain degrees, right? But realistically, there really should be never a problem with asking, okay? So they're asking, but here's the problem. Walmart is the company that they are because they already basically compete on price like nobody else can, because they get every bit of margin that they can. So to think there's just margins out there sitting there that all they have to do is ask, okay? They're battling over these tariffs. Everybody's going to want to shift the burden. But Walmart is a company that is who they are because of the leverage they already have and use. Okay, we'll talk a little bit more about that. If they had excess leverage to put on their suppliers, why weren't they already using it? Ask yourself that question. Stay tuned, folks. We're coming back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got markets in red. NASDAQ 100 down about 1.5% right now. We got the S&Ps off about 1.2%. The Dow off about 0.8%, and the Russell off about 1.25%. So just something to think about when you see, the battle that's going to play out here is that Walmart, and I remember learning about this, folks, remarkable, man. Graduated from college in 2002. Had to check myself for a second. And I remember, I believe it was in college, all right, taking a class, you learn about Walmart. One of the tactics even back then, right, as they were building the army of stores and revenue that they had, was that when they were dealing with suppliers, I remember learning about it, one of the tactics even back then, now you could call it monopolistic, is that you make a deal with the supplier, and one of the terms that Walmart would make, okay, and it just makes sense in terms of the pressure, is that you want to sell something at Walmart, you're going to tell them that there's no way you're going to offer that same product at a cheaper price anywhere else, right? They're going to guarantee that their cost of goods is the same or cheaper than everybody else, generalizing, right? But that would make sense. If you're doing business with Walmart, you're a buyer at Walmart, right? Now they're talking to China. They're talking to different suppliers that you may not have in other areas. But when you talk about goods, whether it's grocery stores, etc., Walmart makes sure that they compete on price. That's what they do. Their cost of goods they have to be able to procure those goods at least at the same price or cheaper than everybody else. Now, I'm sure there's exceptions, okay? But then you go to China. You're going to see reports, and they're already posted in the den. They're already dealing with margins that are maybe 2 to 3%. If the margins were that wide, okay, and there was potential to push China, that China was making too much money, the battles would be there. So it's not as easy as done. And yeah, I'm sure they're going to try and gain concessions. They're going to try and eat into their margins. And maybe those costs get shared across the board, okay? But to think that there's just pressure that Walmart can find the same exact goods. Because imagine this, right? There's more than one Chinese supplier for the goods that Walmart is purchasing. If the suppliers that they're working with had the ability to supply those goods to Walmart at a cheaper price, other companies would already be doing that, undercutting the Chinese suppliers that are out there, right? Especially for Walmart. You talk about other businesses, of course there's margins that can shrink, right? That's where Amazon comes in. But for Walmart and Chinese suppliers, right? You know that Walmart's price shopping in China. They're getting the most competitive bids from suppliers in China. Otherwise, other suppliers would outbid them for cheaper contracts. So now they're coming and asking their current suppliers to bid it down, to create margins that may not be there. So we will see. All right, where do we go from here? Let's see. Yeah, it is remarkable. I was talking to Jacob recently about the banks, right? Let's check out the banks, see how we're trading. Talking about the recession trade, whether you're talking about some of the financials, that's what this talks about. Talking about financials, smaller caps, right? JP Morgan, boy, that slide. It was on Tuesday. We were chatting. You talk about a pullback, man. Today, down another $4, 1.5% for JP Morgan right now. We take a look at a long-term chart. This has been quite a run. I mean, the way I like to think about the market is what's possible, right? And what are the probabilities that that possibility can occur? I'm always looking at what a 382 pullback can be, because that's just a normal move in a market, folks, all right? That brings JP Morgan down almost another $30 to 223. The moves in this market to the upside have been remarkable. NVIDIA almost chopping around at that area, right? Look at that. That area, about 111 on NVIDIA, and that's just from the run we had that began at the beginning of last year when you were trading about $50. Doesn't count the run we had from 14 to 50 the prior year, okay? Just a 382, right to where we accelerated at the low of this week, yeah, for NVIDIA shares. But yeah, keep your eye on the financials, man. They've had quite a run, and you look at the possible pullback. Here we go. Russell, NASDAQ, S&P 500. Yeah. You know, there's a flock to safety right now. You want some good equities on a longer term basis, right? Here are two, okay? And do your own research, all right? Not telling you to go out here and buy Procter & Gamble when it just went from 80 to 180. But look at this channel line, all right? Put that channel line. It is just a concise, well-defined channel line to the upside on a monthly basis. We're sitting kind of at the middle of that, but we're $6 off of all-time highs right now for Procter & Gamble. Another one that jumps to mind, Mickey D's. Look at that. Very similar to Procter & Gamble. We're just off all-time highs at 318. We're trading at 307 right now. That's your monthly. You take a look at the daily. From 280 to 307, pushing the highs we had in October when you traded lower on their earnings. But this one recently, decent earnings. You go back to Procter & Gamble on daily. Look at that bounce on a daily basis, right? That's the channel line that I just gave you that goes back like 10 years. Look at that bounce. Perfect, right? We just got it. Look how many times we've bounced along that bottom portion. And that's basically just coming off the 2018 lows to where we were in the COVID lows and where we've been chopping around for the better part of almost 2.5 years. Okay, this channel line, right? Let's put it on a weekly for Procter & Gamble. So, yeah, you get a nice sign of strength the week of January 20th. We're going to need some more volume to push through this 180 area. You can see that's exactly where we rejected it. So 180 to the upside and about 160 to the downside on Procter & Gamble. Gold plays into that as well, like they bring up. And that kind of jives with the fact that we're talking about whether no matter what the dollar's doing right now, gold is holding up well. There's your longer-term chart of gold trading at 29.16. Put it on a monthly. Here's what I will say. Check out this. Could be a little extended, all right, but I think the run's up to 33.50. Now, the 1 to 1.618 on gold, and that's the run from 2000, folks. But it is remarkable that we've done the same run in a pretty similar time frame, right? From the year 2000 to 2011. So you're talking about a 10, 11-year time frame. You trade up from 250 to 1924, okay? You pull back, and again, over a period of about 10 years, from September of 2015, we're now in March of 2025, you accelerate a pretty similar, $1,700, from $1,000 to $2,700. We're just above that price point. We'll do one more A to B, C to D on gold when we get back. Stay tuned, folks. Market digesting a lot of news this morning. We got the ECB talking right now. Market's in the red. We're coming back for the opening bell. Don't go away.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, and we are opening at pre-market session lows, escalating to the downside with the NASDAQ 100 approaching 2% in the red. We're off by 380 points at 20,279. S&P's off by 1.3. And you see the critical technical area. We're in that area. Lows of Tuesday, lows of Wednesday. We've had to pop both of those days. We'll see if today's the day. but critical area nonetheless. NASDAQ 100, yeah, down 1.8%. Let's jump around to some of the Magnificent Seven, see how we kick off the trading session. Apple shares down about 0.7%. How about that day yesterday in Apple, right? Down to 229, back to 236. NVIDIA down by 3.4% right now. Microsoft down 1.6% right now. You jump over to Meta, down by a similar 1.6%. Google off by 1.1%. Microsoft off by 1.6%. Yeah, Amazon off by 2.4% right now. All right, let's jump around to some of the movers. How about Marvel? Yeah, down by 20%. You talk about it. Semiconductor company. Whew. And they basically come in line for the current quarter, but not what they expected going forward. And you talk about a haircut, man. Check this out. Whew. You know, if this is not a heads up, folks, all right? Remember the type of runs you had. Stratospheric, right? When we got a little bubblicious during the pandemic. This is bubblicious. From 127 to 72. You do it all from October. This type of volatility, not necessarily indicative of strong markets, to put it lightly. All right, getting back to that gold contract, talking about a couple of the A to B, C to Ds I was talking about. So we looked at the largest A to B, C to D, which was the one going from the year 2000, right? That takes us all the way basically to right where we are right now. Okay, but then you look a little longer, shorter term. And what's interesting is, if you take the A to B run you had from 2018 to 2020, you make a pullback and that run begins again in about November of 2022. Okay, that one would have completed at 2,500. The 1 to 618 takes you about 3,100. But if you stay shorter term, okay, we put this back on a 3-year weekly, you really have a run begin at 2,000. It's a nice round number. You consolidate at that 2,000 price point for a year to back it up even further to see, right? You're trading there from July of 2020 to February of 2024. Let's back it up even further so you can see critical area. So this is really where a decisive break happens. You break above the area from 2011, you trade there for 1 year, 2 year, 3 year plus years, okay, and then you break higher to 3,000. Gold generally likes to move in larger than 2,000 point runs. I consider this area in that gold contract a solid consolidation, okay? And it's not a coincidence that it matches up with this area on the chart, which was all-time highs from 2011, okay? And then you make a decisive break November 23, and you trade higher. At this price point and what $2,000 means, I think gold's going higher. Now, we bring it back to the shorter term, okay? And if you take the run that we began from 2000, and you're just saying, okay, what are we dealing with here? You're dealing with 33.50 in the gold contract. And 33.50 in the gold contract, doesn't seem outlandish when you put it on a longer term basis for the run that we had from 2000 up to, you know, you're talking about trading from $250 to $2,000. That's a 7 times multiple, 7.5, right? All we've done is go up 50% from where we've been recently. And if you even take where we were, the cherry pick lows of 2018, you've just tripled. So I think longer term, there's going to be a lot. And could this be the catalyst? Yeah, you better believe it could, man. All right, this move going on in the dollar. You know, I remember when the conversation was going on back here, folks, okay? And it seemed like the dollar back then was maybe on its way back to the 93 area. Right? Not outlandish to think the dollar could be heading back to this 93 area. You make that move, okay, there's a real potential for gold to get a nice acceleration higher, let alone talking about where we were 70, we're at 103, okay? Walmart catches a little bit of a bid on the open. You jump over to Target shares, down by 1.3% right now. The market likes that. They're going to try and shift those margins onto the Chinese suppliers. We'll see if they can. They're going to try. They're going to ask. Yeah, look at the financials. JP Morgan down 2% right now. Bank of America down 2.5%. Wells Fargo down by 1.6%. We jump over to the XLF, down by 1.8% right now. Jump over to Macy's on their numbers, down about 3.2% for Macy's shares. Always tough when you're talking about a turnaround story. Starts to take shape, but, right? Not what you want to hear. There's always a but. But they are closing many. They're closing Macy's by us. It was interesting. There's a West Shore mall that they used to be the anchor, of course, in. And that mall is just going to get a huge revamp. Not sure how it survives really without it. And they're going to in some capacity. But yeah, for the fiscal year, earnings 2 to 225 on sales of 21 billion to 21.4, but the market was looking for 231 on 21.8. So a miss on Macy's. Take a look at a longer term chart of this. You're down by 2% right now. Yeah, look at that chart, right? Nothing wrong with trading an equity like this short term. You're looking for a bounce, but if you're trading this with any type of longevity, take a look at this chart, okay? Now, it doesn't mean you couldn't scale in if you're a believer for something fundamentally, but technically, I see nothing on that chart at all. Just a series of lower lows, lower highs. Now, look at the volume we've got at the lows here on a weekly basis, on their earnings. And, always remarkable when you're talking about a year and a half ago almost, you get an earnings acceleration from $10 up to $22. And just like that, here we are almost challenging the lows yet again, down 2.2% for Macy's shares. Alibaba up by 2%. You talk about some volatility on a longer term basis. Look at this thing pushing those highs. And that story having to do with, where do we got it? All right, I'll come back with it. They've got their own AI, of course. Alibaba. All right. Markets right near the lows. NASDAQ 100 off by 367. S&P's off by 83. Stay tuned, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got a chart of Alibaba up here, up another 2.5%. So yeah, as I mentioned it, we go back to yesterday's chart. There's your rip higher from 132 to almost 142. We catch a bid on the open again. And so it is interesting following how you're doing more with less seems to be the way that you're accelerating this. If you're doing it from China and Alibaba, they have a new AI model, and that AI model is battling DeepSeek, and it is remarkable when you look at. So Alibaba's, how do you even say this? QWQ32B, that model, its latest AI reasoning model, rivals cutting-edge reasoning model, DeepSeek R1. This Alibaba model operates with 32 billion parameters compared to DeepSeek's 671 billion parameters with 37 billion parameters actively engaged during inference. And that's the process of running live data through a trained AI model in order to generate a prediction or tackle a task. So they're doing more with less, and they got their own models. Now, I just don't see spending decreasing to any dramatic degree. You got NVIDIA under pressure with this market right now, okay, down 3.3%. But I don't think it changes the generational opportunity that many of these tech leaders see. Jumping around, Meta down by 1.9%. And there's no way that computing power is not going to be king when it comes to artificial intelligence, the capabilities, and the larger capabilities when you're dealing with companies of this size. Because what is interesting is there are going to be great competitors when it comes to very mundane, like ChatGPT-like tasks, right? Large language models, etc. But I think when you get into the core of how businesses are using these and how they're, when it's talking about self-driving, all of those, the computational power is there for these chips, and it's not going to slow down. But doing more with less is going to become one area of innovation that's not going to stop. As we see this more efficiency, the cost is coming down, right? The inference, the consumption of AI is really the future, and this is going to exponentially increase that volume. You know, and it's not a day without another one. This was out there yesterday. But you're talking about Google testing a new AI mode to handle more complicated queries, right? And that's where the simple stuff is almost getting solved, as they would say, right? You can have discussions on many topics right now. You want to know how to do almost about anything without getting too technical. But when you're talking about very technical models, there's going to be a separate tab from the main page that they're going to allow users to tackle more complex. And that's where I think that's going to continue to persist. And there's no way you're not going to want to be on the forefront of that technology if you're one of these big companies. Just where the future is, period. All right, we talk a little bit of jobs, right? You get jobless claims this morning, a pretty normal number. It was 220-something, normal number. But yeah, layoffs for February, the highest number since July of 2020. Now, 62,000 of those coming from the government, okay? Longer term, maybe you make the case that's for the best. I'm trying to keep things on the business side. When I heard Stevie Cohen, okay, talking about there's no way that this does not impact the economy, I started to say, you know what, man, you got 62,000 job earners, okay? There's no way that that's not going to impact. Now, the economy is relentlessly strong right now. American exceptionalism, as they say in the U.S. economy. But this is only the beginning. And you have layoffs at numbers we haven't seen in almost 5 years, to put that in context, okay? And then you add into that the instability of tariffs, and there's a potential, all right? I'm not saying it's even going to happen, but we got a two-way market with the pressure to the downside right now. You're seeing it again this morning. If you were jubilant yesterday, thinking we got a month reprieve, look where we are right now. And what I'll say is, okay, you look where this market was when we were coming into, let me get it. Excuse me. Yeah, so here was the weekend when we were supposed to get the February tariffs, right? You open lower, you accelerate higher, but guess where we are, okay? And I think that's what this is going to be, a little bit of a roller coaster, but on a month-by-month basis, very difficult to see some wind at the back being actually at highs right now when you're dealing with some pressures to the downside. And we'll see where this dollar plays out, man, because it's not stopping. We're going to get a 103.8 handle. Look at this. Yeah, we got down to 103.862. That was right on the ECB move that it made that move, okay, at about 8:20 a.m. this morning. You had the euro strengthen on the premise that, yes, they cut, but they're probably done cutting. And the headline out there, Lagarde sees inflation risk from more defense spending. Okay, why are they going to be cutting then? Right? Think about it. ECB rates becoming meaningfully less restrictive. There's risks if we're going to spend more on defense. Inflation's going to settle around 2% on a sustained basis. Okay, they're going to be done cutting. Lagarde highlighted the retreat in services inflation to 3.7 from 3.9. Not quite 2. Not quite 2 over there. There's a lot of variables in play. But you can see how they could make the case that at 2.5%, they're risking cutting anywhere from there. So you get you a little bit of euro strength. We get dollar weakness even on the back of that pullback. And we're trading at a 103 handle in the dollar with the NASDAQ 100 off by 1.9% right now. And yeah, Marvel. Be interesting to see if this reverberates a little bit, because you're talking about billions here. And it was about the forecast, as I said. So they're supposed to be taking in $2 billion in the current fiscal quarter. How about 1.88, which runs through April? And that's the worry here. They've been seen as a key beneficiary of the AI computing build-out. And if they're missing, and folks, that's not a small miss. That's $120 million over 90 days they just missed by. And on a percentage basis, it's a 6% miss. Okay? 6% miss for a growth company in AI on revenue on a 90-day basis. Yeah, you better be careful. AVGO, Broadcom shares, down by 5% right now. AMD off by 1.6. We jump over to Intel shares, down by 1.5% right now. NVIDIA down by 3%. Apple catches a little bit of a bid. Look at this market down 2% in Apple, only down 0.25%. Apple's a safety haven right now, just consolidating near this 235 price point. Amazon off by 2.4. All right, folks, one more segment. S&P's off by 78. Stay tuned. We're coming back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's off by 84. We've just been chopping around near these lows. We put it back on a 5-minute chart. We plunge lower on the open, and we're sitting right where we came into the opening bell right now with the S&P's off 1.4, NASDAQ off 1.7. As I've been saying, keep your eye on that dollar. All the pressure to the downside right now on the dollar, and that could have some huge implications going forward. We got the 10-year right now. Let's see where we're sitting on the 10-year right now. We're at about 4.27 earlier today, and we're sitting right now 4.3. So 4.3% on the 10-year. Jump over to Tesla shares. Down another 4.2% today. Yeah, coming right into the lows of Tuesday for Tesla at 267. Talk about some moves, man. All right, this one was an interesting one from the journal I was reading about. So here, we go to Netflix first. Reed Hastings, he's not just dealing with Netflix. He's dealing with private ski mountains. Yeah, Netflix shares. Look at that pullback, man. 3.5% right now to the downside for Netflix. But this one, so how about this? What's he doing? He bought Powder Mountain, okay? Is that what it is, right? I think it's called Powder Mountain. It's a good name. Powder Haven. There it is. No, sits atop Powder Mountain. And he's going to get 650 homeowners is the deal, and you're basically buying your own ski mountain, right? 650 houses. You own the house. You get to ski the mountain. It's a private mountain. Makes me think of a story of haves, have-nots in terms of that's the next business model and how that applies to businesses, because it seems like that's the way it's playing out right now. All right, folks, thanks so much for kicking off your trading day right here. Stay tuned. We got our man Basil Chapman. He's coming up next, and we got markets in the red right now. We got the VIX sitting at 24.33 right now. And stay tuned, folks. Basil's coming up next. Have a great Thursday, everybody, and I'll see you tomorrow morning. Have a great one, everybody.